happening at all?
You said it.
Okay. Thank you, my friend. Anthony, it's always good chatting. Anthony Chen. All right, in the meantime, let's get a read on the markets right now as we're in and out of these session lows. The Dow down 454 points. Christine Short is with us, the National Tax Union Executive Vice President. Brandon Arnold and Heritage Foundation Tax Policy Analyst. Adam, is it Mitchell? I'm sorry.
Michelle.
Michelle, I apologize. Adam, what is your take on this and whether the market's overreacting to all these developments? Added steam, I guess, to these Larry Kudlow comments on China that we're going nowhere fast. What do you make of that?
Yeah, I think that you need to look at the fundamentals, as your guest was just talking about. We have a strong economy. We have a lowest unemployment rate in almost 50 years. We're seeing wages are starting to pick up again. The businesses are adding more jobs to the economy in the longest running trend of that ever since we started measuring these things. So I think the fundamentals are strong, and we just need to continue with the pro-growth policies we've been seeing, lower taxes, lower regulations, and it'll all work out.
You know, Christine, I'm noticing all the market action today, looking at internals. If you think about the roughly 3% sell-off in the Shanghai, sort of like their Dow, if you will, that's down 26% in the last year. It's well into bear market territory. And a lot of people are saying what's different this time is that we're following it. Do you buy that? And if that's the case, do you worry about that?
You know, I'm worried about a lot of the developments today, and to your prior guest comments about look at the fundamentals, sure, our economy is still very robust. I have reason to believe corporate earnings will be, you know, quite good this quarter, and hopefully that will lift us out some of this, although, as you mentioned, the industrials haven't been doing that well, but, you know, we've only got about 10% of companies reporting at this point.
Very
we
true.
expect the numbers to get a bit better, but what I'm noticing very early on is, although we're expecting S&P 500 earnings growth of about 20%, that's slowing. You know, first half of the year was very strong. We're starting to see numbers for the second half of the year and even 2019 to slow from that rate. And so I would expect you see a lot of this reflected in guidance. So far, not only are we seeing tariff concerns, but the bigger concern right now is foreign currency exchange. So a lot of corporations worried about the stronger dollar, and a lot of them actually issuing guidance that reflects that.
You know, Brandon, there's that old market lore that, you know, bull markets don't die of old age, it's something else, you know, and I always wonder in it with everyone that we see, whether the 2008 experience with the market meltdown, even what was happening in the backdrop to 87 and the crash, is there anything you pay particular attention to or you worry about?
Well, I think the biggest concern out there for the market is our trade policy. Certainly, you've already touched on that, but the relationship that we have with China from an economic perspective, certainly we need to get some concessions out of them, particularly as it pertains to IP, as it pertains to the forced joint venture requirements that they impose on foreign investors. But at the end of the day, we need to stabilize that relationship if we're going to have a growing economy continuing for years and years to come. The fundamentals are good. Adam touched on some of the tax policy and deregulatory policy, but that could all be undermined by some negative trade situations, and China being the biggest cause for concern, certainly.
All right, I want to bring Susan Lee into this at the New York Stock Exchange here. This China stuff just sort of added to the momentum, I guess, right, Susan?
Yeah, well, we had that China stock sell-off last night, and then the spike in Italian yields. So that had Forex selling this morning, really heading into the news of Mnuchin canceling his trip to Saudi Arabia. It's just multifaceted at this point. But I can tell you that the mood here on the floor of the New York Stock Exchange, it's relatively calm. There's not a lot of volume at play, so this is a low-volume sell-off, which exaggerates a lot of these moves.
Right.
A lot of people are not putting on big trades, whether to sell or to buy at this point. There's a lot of volume trading. Algorithms kicking in, especially with levels that dip, right? And we do have corrections when it comes to the transports. And as I mentioned to you before, the transport index is important because it's a proxy to the U.S. economy. And Larry Kudlow says that having a strong domestic economy is actually a good negotiating leverage against China. So that's something to closely watch. But I can tell you that it feels relatively calm. There isn't a lot of fear. And I guess people have gotten used to these large number sell-offs as we are playing with bigger numbers these days.
Yeah, no, you're definitely right about that, and we should hasten to add it was last week at this time that we had the second day of big selling after the better than 800-point fall off in the Dow, down about 550 points at the second day. We recouped a little bit by Friday, so these are volatile swings. But Adam, I want to come back to this notion that the underpinnings are fine, fundamentals are fine, that might win out. Do you see anything jeopardizing that?
I think there is policy uncertainty in a lot of places. You look at the upcoming election, if some of the rhetoric is true and we do start rolling back some of these tax cuts, if the Democrats have their way, that is concerning for both American families and American businesses. We recently came out with a report showing that the average American family could be $46,000 poorer if the TCJA were repealed, and that ripples through the economy in any number of ways. And so I think we need to make it clear that the pro-growth policies are here to stay and that businesses can count on them for the future.
You know, it's interesting, Christine, on the tax cuts and whether they're a good thing or a galvanizing thing for voters. You know, there's this Fox poll that's out today that shows that when America to judge the issues that matter the most, healthcare was #1 and taxes were dead last. Were you surprised?
You know, that is surprising to me, and I think the intended consequence or goal of the tax cuts has not been fully realized, and I'm not sure if we're going to see that it is. I mean, we've seen the numbers and the deficit rising, and I think the idea when TCJA was implemented, it was, you know what, we're going to give these companies tax cuts. They're going to then filter that through wages, bonuses. They're going to invest in CapEx and R&D spending, and that will all get filtered back through the economy. We really haven't seen it to that big of a scale. Sure, some companies have increased salaries for employees, given one-time bonuses. You know, we thought consumers would go out and spend that. You know, retail spending's been just sort of mild. But now we're actually seeing companies spend most of that money on stock buybacks. Stock buybacks are up 50% first quarter of this year versus last year. And yes, business investing is up about 19% over that time. So that's a welcomed increase, but it's just not keeping pace with where we're seeing share repurchases. And Goldman's predicting that share repurchases for all U.S. companies reach $1 trillion by the end of the year. So I don't see any reason to believe that they're going to change that or propose any sort of big investment, spending proposals. And again, like I said, just early on from this earnings season, we're seeing a bit of caution in some companies sort of pumping the brakes. So when that happens, they certainly tighten up and become a lot more conservative with spending. So I wouldn't expect to see that, necessarily go to employees. And that's a little bit, worrisome for 2019.
All right, guys, thank you for all this breaking news. I had to truncate things a little bit, and I appreciate your patience and insights. The Dow down about 437 points right now. 28 of the 30 issues are down. Interest rates, though, are